My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to my trading game plan. Of course, I'm Gareth Soloway, Chief Market Strategist at verifiedinvesting.com. And today, as always, we're going to focus on the charts and the data. No hype, no nonsense. Charts and data, because that's what gives us the probability. When I bring in my own emotion into trading, I almost always lose. I'm sure many of you have found that as well. All right, into the action we go. Let's cut right to the chase here and get to the S&P futures. So what we saw is early in the after hours yesterday, the markets did go up. This was on the back of President Trump okaying the selling of chips from Nvidia, the H200s, to China. But ultimately, you could see that, again, since then, we have faded and actually gone negative on the S&P. So the S&P is set to open slightly lower today. Now, keep in mind, today's price action probably very muted overall as we await the Fed decision tomorrow at 2 p.m. And don't forget, folks, we'll be going live and trading live the Fed decision. You'll be able to access this with all my traders, the live day trading room. You'll be able to tune in on YouTube or on our homepage here at verifiedinvesting.com. We'll be taking trades. We'll be giving our exact entries, exits, analyzing the Fed commentary and the charts. It's going to be awesome. All right. So that's tomorrow we'll be going live around 1:30 p.m. Eastern time into that Fed decision for the whole entire afternoon. Now, if we flip back to the charts, let's go back to the S&P. I continue to see major sell signals. All right. So the sell signals continue to be en masse. Part of them is the fact that we filled our final gap on Monday, right? Or on Friday, I should say there. And you can see right here, there's that gap fill, the final gap. In addition, I was pointing out yesterday how even if you're bullish, which is always a possibility, right? Listen, we could go up. There's no doubt about it. But from that level to the upside maximum is only about 1.2%. Now, obviously, if we bring it down to where we closed yesterday, it's getting a little bit bigger. It's about 1.9%. So that's your reward. Again, as a trader, you always want to look at what's my reward to my risk. And so, again, you could be bullish into year end for a Santa Claus rally. Listen, it could happen. In all fairness, it usually does. But what's your upside there? 1.9%? Really? That's the extent of it? To me, as a technician, as a logic-based trader, it doesn't really make sense for me to go long here on the charts for a 1.9% move on the S&P 500. And so ultimately, then we flip back to the charts and we say, okay, well, what's my downside potential? Well, number one, we have this massive parallel. It marked the high of the bull market right here. By the way, look at this, guys. Look at this. And this is just interesting, right? Because we came up here and we kind of rallied into this level here. We then kind of had this pullback, and then we actually double tapped it before our bigger decline. And I'm just noticing this now in real time with you guys. And the reason why I'm pointing that out is maybe that's kind of what we're going to do here. If we get a Santa Claus rally, imagine we replicate that precisely. Down move, up move, down move, up move, goes back, and then our bigger move down starts. And really, again, looking back here, it's almost identical here. A little double tap right there, and then our bigger move down. So listen, again, you never know. And this is the tricky thing, right? When you're coming into Christmas and New Year's, and remember, Christmas Eve and New Year's Eve this year is a Wednesday. All right. That means Christmas Day and New Year's Day is a Thursday. I mean, those weeks are going to be so light in trading volume that really, again, retail will rule the roost. If retail is bullish, markets are probably going to float up. But again, looking at that, sure, maybe we go up 1.9% from here, but still very minimal. Now, remember, the Fed will have a lot of determination on that tomorrow based on what they do. They're going to cut 25 basis points, but are they going to be hawkish or dovish in the commentary? And that's what's going to matter. All right, flipping over to the QQQ here real quick, guys. The Qs, take a look at this. So again, we've talked about this trend line for some time now. I took out the parallel just to keep it as simple as possible. But look at this trend line, how it continues to basically work as resistance over and over again, rejecting price. And today we are seeing the QQQ lower on the morning session. All right, so again, very important to see. Now, interestingly enough, the 10-year yield is getting rejected. Now, it was resistance, so let's not be super surprised it's getting rejected here. The question is, are we getting rejected because we're going to consolidate and break through it on the Fed decision? Or is the Fed going to be more dovish and we're going to have a bigger down move in the 10-year yield? Why has the 10-year yield rallied to the upside so much recently? The answer can be found in the Japanese 10-year, which has gone parabolic. Notice the Japanese 10-year today is down slightly. So it's consolidating or pausing just before the 2% level. That 2% level has been a big factor. Now, we were talking about this in the trading room yesterday with my traders of why is 2% so significant? Well, think about this, guys. When you go buy something at the store, what's the price? $19.99, $9.99, $1.99. Why not $2? Why not $10? Why not $20? Because it's psychological. And so the reason why I've been pointing out 2% on the 10-year versus the importance of 1.99 or 1.98 is psychologically to us as humans, once you get that 2 in front of it, there's a bigger impact. And so again, you can relay that same information from retail and how retail prices things to how human nature behaves when there's a 2% handle on the Japanese 10-year. And that's, again, why I think that level is such a major one. Okay, so back to the charts we go, guys. We're going to go through a couple charts here. We're going to go through Nvidia. So number one, Nvidia. Great pop yesterday after hours when President Trump okayed the selling of H200 chips to China. But look, it's basically come back in. I said this to my traders here in the office. I said, guys, haven't we heard this news? Like, I swear every week it's like Trump's going to okay the selling of these chips to China. It's like a repeat thing. So sure, after hours, there was a lot of hype and the stock went up. But now, honestly, it's basically flat on the day, and we've seen the markets actually turn lower. The other thing I have to point out is this, guys. So we talk about manipulation. I showed you how the PCE data on Friday, there were insiders that were privy to this government data before you and I. Well, I want to show you this, guys, because, again, I'm big on transparency and just showing you this various things. If we go to the S&P, the SPY, look at this. Right here in the final 10-minute candle of the trading day, look at this major move up on the SPY or the S&P 500. All right, this was between 3:50 and 4 o'clock when the markets closed at 4 o'clock yesterday. Okay, so interesting, right? Okay, the markets had a big pop there. Then you start to say, wait a minute, right after hours on Nvidia, the news came out right here at 4:20 that Trump was okaying the selling of H200 chips to China, and we see this big move to the upside. Now, listen, it has faded, but this is just more evidence to me that these decisions inside of the government that are major, shifts, they are getting passed off to people ahead of time who are then able to literally make millions of dollars on these type of announcements. All right, it seems like anything that's government related is getting out to a select few, whether they're top hedge funds or buddies or whatever it may be. I'm just pointing it out to you. Does it annoy me? Yes, it does, frankly. It does. I really do want as level of a playing field as possible. It's one of the reasons why I teach technical analysis is because it allows us to basically compete with the institutional money. But literally, is there any way to compete with insider information? Not really. Like if it's something coming down from the president or from someone else, there's really nothing we can do about that. We're not going to be able to tell in the charts that a decision has been made usually. All right. In any case, I wanted to show you guys that. Toll Brothers here, guys. Take a look. This stock, again, reported earnings after the bell. The stock is cratering down to about $128. More evidence that the housing market is in a recession, folks. It just is what it is. All right. So if we look at the charts, where is my first potential trading level? There's a gap fill at 126.20. And then there's a pivot low here at 124. So I'll be looking to day trade Toll Brothers right down in this range. This would actually be a pretty big move for Toll Brothers. Historically, it doesn't have huge moves. Right now, I believe it's down about 6%. So this would get towards that 10% range on Toll Brothers. And again, that would be an area where I would look for a day trade only. What about a swing trade? Swing trade, no way. And I'll tell you why. Because this is a longer term trend line right here. And on a swing basis, if we break this, longer term or midterm, we could call it, for the next month, 2 months, it's very likely we're going to head much, much lower on Toll Brothers. And honestly, I don't see anything that's going to really curb the housing market and start getting it started again in the near term. Even if the Fed lowers rates, remember, the Fed controls the short end of the yield curve, not the long end. And so the 10, the 20-year, the 30-year, which is mortgages, that is controlled by the markets. And as long as our government continues to spend recklessly and run debt higher, interest rates over the longer term are inevitably going to go up, because buyers of our debt are going to demand higher interest rates to compensate for the risk that they're taking, that the U.S. may eventually never be able to repay its debts, right? And that's just the way it works in the debt markets. All right, Carvana, guys, one of my favorite shorts here, popped yesterday on the back of the addition to the S&P 500. Look at how many up days you've had on this. Incredible. And then I want to show you a trend line that we hit yesterday. Take your low pivot from April. So we're taking a major pivot low, connect it through all of these lows right here, and look at what you hit yesterday. Huge sell signal on Carvana, in my opinion. Look at these trend line, these pivot points, and then look at what we went. Essentially, it broke down and retraced right to the scene of the crime and getting rejected beautifully right there. All right, now listen, it's basically flat to slightly lower on the day. I would love to see it pop up, maybe giving me another day tradable shorting opportunity here, but that to me, folks, is ridiculous. It's basically $100 billion company. Compared that to a Ford, and listen, obviously a Ford is a producer of vehicles, and this is more of a a vending machine of cars, of used cars, but still, it's still in the same zone, and people are still struggling to be able to afford cars, right? I mean, to afford anything, except unless you're in that upper 10% echelon of high net worth individuals that are investing. And so ultimately, should this be trading at a forward PE of 75 to 100? No, absolutely not. All right. So that's number one. Broadcom's another one of my favorite shorts here, guys. If we take a look, we could see again, yesterday it hit here. There's a small chance we could get up and go a little bit higher on Broadcom and tag right here. But this, again, is trading at a multiple that is double Nvidia going forward. It is way overdone. It's nearing a $2 trillion valuation. So again, it's a big company. The law of big numbers applies here, and things like that should be taken into account. All right. Now, the next thing. So today at 11:30 a.m. Eastern time, I'm going to be on one of our new shows called, again, let me get this title right because it's a freaking awesome title. Crypto Combat, Wrecked or Rich. And basically, it's me and my traders. We're going to be competing in a 45-minute show with real money, real accounts. We're going to be trading crypto live. All right, we have it. There's hosts to this show. It is going to be awesome. I'm going to play you this quick little blip so you guys can check it out. But I hope you tune in today. If not, watch it on replay. We are fun. We mess around with each other. We joke. We throw insults. We throw barbs. Entertaining and potentially profitable. Here it is.
Two traders, $10,000, 45 minutes of pure crypto chaos. This Tuesday at 11:30 a.m. Eastern, Verified Investing presents Crypto Combat, Wrecked or Rich. Watch Benjamin Poole face off against Lawton Ho in live cryptocurrency battle. Real money, real positions, real consequences. When that buzzer hits, Judge Drew Dosek decides who walks away rich and who gets absolutely wrecked. Crypto Combat, Wrecked or Rich, airing every Tuesday, 11:30 a.m. Eastern at verifiedinvesting.com. Set your alarm. This isn't theory anymore.
Hey, everybody. Hope you enjoyed that. To me, I'm pumped for that. I love this type of stuff. It's just fun to trade and just to have fun, right? I mean, you got to have fun in life. And again, I'll be on the show today. Next week, I want to have another guest. I'd love to reach out to some of these crypto traders. If you're a legit crypto trader tuning in, reach out to us. You can be the guest. We want to have a guest on every week that is trading and competing against our pros. You'll get a $10,000 trading account to do it. It should be really, really cool. All right. Speaking of crypto, let's get into Bitcoin. Bitcoin is basically flatlined over the last couple days. And what are we seeing here, guys? So number one, we're seeing that we continue to trade in an upsloping parallel channel, right? So we look at this and we basically see that crypto or Bitcoin is chopping sideways to higher. Now, on a micro scale, this is, again, neutral to positive, right? Why is over the next couple days Bitcoin neutral to bullish? Well, because, again, it's stuck within this range. And so, again, very limited upside, but you still can stay. Now, if it breaks, the macro pattern plays out, right? That's the bigger pattern. You have this down move with this inside bar. That's a bear flag, right? Bear flags go down and then choppy sideways inside bar. They usually resolve themselves to the upside. So near term, over the next day or two, neutral to upside bias. But if this trend line breaks, the bear flag begins to play out. Downside target remains basically in the low 70,000 range. By the way, this level comes from all the way back here, going back to March. In fact, you could actually extend it all the way out to almost the highs of the bull market in 2021. All right. So again, by the way, do you guys see one of the, and listen, I love Bitcoin in the longer term. I'm just also a trader, so I don't mind if it goes down because I can just buy more, and I love to go short and long. The other thing that's concerning me is, again, this is very preliminary, but is this a bigger head and shoulders pattern? I know us bulls don't want to think about this, but if we rallied up like this and we extend this out, right, and we say, okay, this becomes like, let's say this continues like this, could this be a bigger head and shoulders pattern? Ay. That could be something to watch. Now, listen, that's so preliminary. Don't get bent out of shape by it. It is just something that, as a pattern recognition specialist, which is what I want all of you to be, it's just something we keep in our back kind of mind. We just want to think about that and say, okay, well, could that get there? All right, next up, let's take a look at ETH. ETH, guys, same sort of thing. Big rollover, consolidating. So near-term bullish, right? Near-term bullish, very simple chart here. We have the lows, the highs here. We're continuing to trade in this type of pattern. Notice where we hit support. And this is one of the reasons why I bought ETH with members of Smart Money Crypto. All right. And that's, by the way, that's a service that I offer, swing trade service on verifiedinvesting.com. But you have these highs. So we ran up into this level. This is classic technical analysis. Former resistance, right? Breaks out. What does former resistance become once you break above it? It becomes support. And so you can see, again, we're bouncing off of that support. Former resistance becomes support. And again, that leads me to believe near-term ETH could go up a little bit more as well. Flipping over to gold here, bear with me here. So on gold, the bull flag continues to form. Remember, this means that we had the wedge pattern. We broke out. We confirmed. Then this is a bull flag. Generally, probability says we should eventually trade higher to double top. Then we have to see if it breaks above double top at 4,400. Now, as a good trader, we always look at what happens if it fails. How do we know if it fails? Because you just don't want to be oblivious and just be like, let's say gold goes back to 3,800 and you're just like, no, it's bullish, right? Short term. No, well, actually, it's not. Now, listen, long term, it's still bullish. It's still in a long-term uptrend. It's awesome. But in the near term, if it breaks below this zone here, basically 4,100, then and confirms, now it becomes a broken pattern or basically a failed pattern. And then you start saying, okay, it could go down to 4,000, maybe even back to 3,900. So again, as a good trader, listen, all of us, if you're long gold, you only want to hear bullish sides, right? And that's that's human nature, right? If we're long on something and we're committing to it, we really just want to be like something that reinforces our thought process. But the best traders in the world always look at the negatives, including and the positives. So not just the good side, but you got to look at the bad side. And that's what I like to do on the charts because it keeps me more realistic and I can be reactionary. I can understand when I need to react. Silver, guys, taking a look at silver real quick. Bullish consolidation. I'm still optimistic. We're headed up to about 61, maybe even 62 based on this upsloping, ascending parallel channel. And then if we look at oil real quick here, folks, and we take a look, oil had this nasty pullback yesterday. It closed above. It never confirmed the breakout. That's always why you really want to see confirmation of a breakout. We came back inside, so it's basically recaptured this zone. It needs to close back above and confirm. Then you should get that bigger move to the upside. Overall, I still like it, though. I'm still bullish. I am still long on oil, still in the money on oil, but keep an eye on it. And then lastly, guys, the call heard around the world on nat gas. Holy cow, what a drop on nat gas, folks. This is cratering to the downside. My level given literally a month ago was wait for this level to short, and I did just that. I actually already covered my short. We made about 20% on the KOLD, which we went long KOLD. It's an inverse ETF 2X on nat gas. But look at this fall. Look for today. You're going to hit support around 440 right down here. If this hits, you could actually get a quick day trade bounce off of it. But really impressive. What an epic reversal on natural gas. That is amazing, folks. Okay. All right, guys. So listen. I had to talk about the crypto combat today. Again, please tune in at 11:30. You'll see me on there. You'll see my head trader, Ben. You'll see Drew. You'll see Lawton. All of us as traders are going to be competing. There's key things we have to do. There's points given out by the anchors, the moderators there. They're going to be keeping us in alignment. We'll see who throws the best insult. It'll be fun. Listen, we do it all for fun. These guys are the best. And again, folks, tune in at 11:30 today for Crypto Combat, Wrecked or Rich. I'll be trading. Have a good one, guys. Thanks so much. I'll talk to you soon. Take care.